Hi, welcome back. So subdued still for the market, but the mid-cap is where all the action is at. So let's bring in someone who will give us the top picks from that space for the next 1 year. Himanshu Nayyar, VP of Consumer and Retail Space at Systematix Shares, now joins in. Hi, Himanshu. Good afternoon to you. So what's the best place, given that GST could be a reality soon? What's the best place and the set of stocks that you'll be looking at for the next 1 year?
Sure. So yeah, we've initiated coverage on the retail sector. We believe in the current environment where investors are hungry for growth, modern retail sector is one which gives you that. Within that, our top picks would be companies in branded apparel and the food and grocery retailers. So two stocks which we are pushing right now are Future Retail on the food and grocery side and Aditya Birla Fashion and Retail on the branded apparel side.
Yeah. So let's just talk about, viewers would be greatly interested in understanding the thought process behind something like a Future Retail. Could you talk to us briefly the story behind it and what do you expect to happen here in the company?
Right. So Future Retail had a very difficult past, and last year, after the restructuring that they did, where they disposed of all their non-core assets, is now India's top pure play retail company, which is asset light and does not have any fixed asset backlog. So they own the top brands in the country like Big Bazaar, Fashion at Big Bazaar, and the recently acquired Easy Day chain of convenience stores. Now it's a two-pronged story here. One is very strong, 20% plus top line growth is possible. Given that if you see their presence, they are still in the top 20-25 cities of the country in a big way. They are looking to massively increase their distribution. And secondly, on the margin front, they are just at about 3.3% sort of margins. So there is a huge potential to move up these margins. How that will come? The biggest driver would be increase in the share of their own brands, the private label brands on the food and grocery side. So they'll be introducing a number of new brands from their sister concern, Future Consumer, which will drive up margins. Secondly, on the apparel side, they're doing very well under the Fashion at Big Bazaar brand, where the premiumization theme is playing out. The positioning is in the premium end now. So there again, I see a significant margin improvement. So a combination of these two things over the next 2 years can drive a 45 to 50% CAGR in earnings. And even if you look at valuations compared to a guy like DMart, they are trading at about a 40% discount on FY19 multiples.
Okay, from the textile space, I was reading a report which actually says that the Indian textile industry, there have been a lot of structural shifts and as regards their competitors in China or Pakistan, that Indian textile makers now have a huge advantage. They've become very competitive. Raw material is available at lower cost compared to their competing countries. Despite that, on Arvind, you don't have a very aggressive target, just about 440 odd. Don't you see more upside?
See, I mean, both Arvind as well as ABFRL are longer term stories. But if you talk to me from a 1 year perspective, Arvind has already seen a run up post the deal that they had with Multiples Private Equity, where they disposed of 10% stake in their branded business. So the stock has already moved up by 20% in the last 6 months. That is why a limited upside from a 1 year perspective. But both Arvind as well as ABFRL are very strong branded apparel plays. But out of the two, we like ABFRL better from a 1 year perspective today.
Okay, all right. And what is it trading at? I mean, so you gave us some multiples. You said Future Retail is trading at a 40% discount to DMart on FY19 earnings.
Yes.
Yeah, and what about ABFRL?
So ABFRL, both ABFRL as well as the Future, PE would not be the right way to look at them, because both of these companies are not paying taxes because they are carrying accumulated losses from the acquisitions that they did, right? So a better way to compare would be an EV/EBITDA basis, which we are using to value these companies. So currently, Avenue Supermarts, the DMart company, is trading at 25 times FY19. Future Retail would be trading at close to about 16 times FY19, and even ABFRL would be trading at close to 16-17 times FY19 EV/EBITDA. So in both these two, we see that valuation discount with DMart narrowing quite significantly over the next 1 year.
All right, Himanshu, we'll leave it at that for the moment. Thanks very much for joining in. A quick break, but we'll come back with...
I just want to quickly highlight Reliance. Look at that. I mean, that is
wow.
a big move coming in.